ULTY by YieldMax has been getting a lot of hype, and this Reddit post brought a lot of light and inspired me to do a video. Along with my last video, I did MSTY versus ULTY, which has the better returns. I'll link it up here in the right so you can see it. But yeah, let's go into it. It made me think a little bit more about ULTY, made me want to jump into it, kind of do a like in-depth review, overview, kind of deep dive, a little bit of research on what's changed and what it's doing, and why is all the hype. So like even looking at these comments, low for upcoming dividend, ULTY is consistent again. IV for MSTY are dropping, expecting lower NAV distributions. I won't touch PLTY. I'm not going to go too far into Reddit because the comments can be quite insane, right? And go all over the place, but entertaining. But let me click over here and we'll go into the stock price. So this is not total return, but you can see at Inception, ULTY opened up at $20 and it's had a horrific downfall to the low, negative 74%. And it kind of fell down here. You can see where it went to weekly distributions and there was a strategy change. So this was a monthly pair, and as at Inception, YieldMax was using it was like a fund of funds. So it was investing, it was basically holding other YieldMax funds inside of the fund, right? And here they realize, hey, something's wrong. This is not working. A lot of the assets they were holding the funds that they were holding were going down. There were pretty good distributions. We'll go into total returns and stuff like that, but with the NAV decaying this much, it just didn't make sense. So now we're down here. We'll zoom in a little more into the 1 hour. From the low, we have seen about a 17-18% increase. Actually, we're just about break even from when the strategy changed to weekly. I'm not sure where in here they changed the strategy to holding individual assets, but we're going to get into that too. So let's go to the next page. Let's go over the fund overview because this has changed. So you can see it's an actively managed fund trying to seek monthly income from a portfolio of covered call strategies, each on underlying security. So each on an underlying security. That's important. ULTY also provides direct or indirect exposure to the share price of the underlying securities, subject to a limit on potential investment gains. So it says limit is another important thing because they're selling covered calls or writing calls on the assets that they hold. It says ULTY's investment sub-advisor will typically select between 10 to 15 securities, primarily on the basis of such securities IV levels, and will regularly review ULTY's portfolio to determine whether one or more of its covered call strategies should be increased, decreased, or eliminated. So they're actively choosing tickers, removing, adding, changing the weighting, stuff like that. And due to ULTY's investment strategy, its indirect exposure to gains, if any, or the share price of securities is capped. So if they're holding an asset and it pumps, it can only get however many percentages that call is out of the money. So like anything else, you're still exposed to 100% of the downside and you'll never participate in all the gains to the upside. That's the risk of these covered call strategies. But the good thing about ULTY is it holds multiple things. So if one asset crashes, and the rest of them do good, it's not going to hurt the share price as much now because you're spread out. And it kind of looks like they have 26 holdings right now, about 25. They said 15 to 30. So I don't know if that's maxed out at 30, but you can see the weightings. And this is currently what they're holding. AST, Space Mobile, which is a satellite company competing, I'm guessing, similar to SpaceX. Reddit, Hood. I mean, these are good. Upstart, Tesla, TQQQ, ProShares. I think this is a leverage ETF on the QQQ. 3x? 2x? I forget. Nvidia, Palantir. So Oklo. So you're seeing some of these good names. Coin, TNA. I forgot what this was. I think this is oil, or is that? Don't quote me on that. I forget. But MSTR. So you're seeing a lot of super micro computer HIMs. You're seeing a lot of popular and names with high IV in here, right? So good. This is different. We don't haven't seen any other YieldMax doing this, paying out weekly. So it looks like they really have done a strategy change, and this is kind of neat. So I can see why the interest and the sentiment has changed towards Alti now. Does it need to prove itself? Sure, but we'll keep looking at a little more. So now that we've seen that, let's look at the history. So just from, we'll do year to date. So year to date, you can see Alti in orange, 9% total return. I put Palantir on here too because it's the one that's really smoking the competition right now, and MSTY. So it's lagging behind them quite a bit still, right? If we go out a year, it's really behind still. So 14%. Now, I know people are saying consistent. Can we even go to a month? If we go to a month, then we're talking. So people, all the hype right now is, okay, did they turn this fund around? And from a short-term perspective, it looks like, yeah. Do I want to see more history? Sure, but from a short-term perspective, this looks good. It's right there. It's beating MSTY. It's right there on par with Palantir. You're holding 25 assets. The managers seem to be picking good. And I think the biggest risk in this is the fund manager. But if you believe in YieldMax and what they're doing in the fund managers and the traders, they have a pretty good, all the funds still exist. There's been limited stock splits. The trades that they're doing are, on par. They're not really missing they're not missing anything. They're following their prospectus. So, this is an interesting experiment. You're just putting a little more faith in the fund manager, right? To make these picks. You're not getting double dipped with fees anymore because you kind of were before with the point with the 0.9, I think, or it was 1.2% expense ratio, plus then that they were buying the YieldMax funds inside, which was pretty much they were like double dipping fees. So you're not getting that anymore. But yeah, I think this is something that's warranted for me to right now is good. I think we need to do a video in a couple months and follow up on this. I did buy a share of Alti and PLTY in my dividend portfolio to kind of just have it there, so when I'm checking my portfolio, I can track the price and keep an eye on what's happening from a total return perspective. So you'll see that in the portfolio review. And yeah, if you like videos like this and want to see more, subscribe, hit the thumbs up button, and we'll see you in the next video.